Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. Good to have you. You know what? We're talking Airbnb. The stock's pulled back. Bear market territory from recent highs. But if you look across the sector, Landon, we're seeing some weakness in most of their competitors, right? The hotels, Marriott's, Hyatt's, Hilton's. They're down anywhere from 22 to 36% also from all-time highs. Airbnb is not from an all-time high. Is this, maybe what's currently going on in the overall travel market at this point? Or is this maybe just a blip due to the uncertainty that we're seeing in tariffs? What kind of data do you guys have on this?
Yeah, I think it's a little bit of both. I mean, we've got, if you look at data on web visits across, the hotels and the travel sites, including Airbnb, they're all pretty much down. I mean, the Airbnb is the best of the travel sites, but it's doing worse than Hyatt and Hilton, which is interesting because there's quite a spread there. So this has been a bit of a wild ride for Airbnb. Last quarter, right before they reported, their stock was 140. They jumped up to 163, 164 on a favorable earnings report, and then just decimated, bounced off of 100, and now we're up to 115. So, you could argue that they're pretty low compared to what they've been, but this is a growth stock. This is not like a Hilton or a Hyatt where they have a ton of assets and, it's a lot more stable. I mean, this is a technology company, essentially, very asset light. And so you have to see growth in this company. And I think one of the things that kind of, stuck in investors' minds was that they softened their guidance just a little bit. I mean, their revenue grew 12% year over year last quarter, but now they're saying, hey, it's going to be 10 to 12. So it's just a little bit softer. It's not terrible, but of course you always want to see that growth number increasing. So when we look at that, you take into account everything that they're doing. They're upgrading their technology. They've redesigned their checkout flow. They've got personalized searches now. They've got guest favorite badges. And my favorite feature, long overdue, is they've got the ability to show you the total price when you're searching. So you don't click on something that says $200 a night and then it comes out to $380 after cleaning fees. So I love that they finally did that. But they're trying to improve the mobile experience, which is important for them. I mean, if you look at their bookings, 60% are now on mobile, up from 55% last year. But their web data is down about 6% year over year. Their app data is down about 2% year over year. So it's actually, going the wrong direction. And as you can see here, again, they're better than Booking. They're better than Expedia. But they're not as good as the top two hotels who are struggling. So to answer your earlier question, this is industry-wide. Just less people are looking to travel right now. But they're doing better than their direct competition, but still not as good as the traditional hotels. And I think it's because of that growth number. People want to see continued growth in asset-light model. And you can see here monthly active users pretty flat. I mean, down 2% year over year. You want to see that number going up on their app. That's where most of the people are booking. Now, they have talked about some pretty aggressive expansion. They're talking about wanting to be, the provider for everything when it comes to travel and living needs. We'll see how that materializes over the next few years. I don't think investors have a ton of confidence in their ability to execute on that broad statement, but we'll see. They've done a good job so far of building what they have. Now it's just a matter of, continuing to grow that user base, because that's the key. Right now, with the stock down so much, I don't love this company overall, but with the stock down so much, it's not bad here. If it, bounced off 100 pretty hard there, 115 now. So, I could see maybe dipping your toe into this one, but it's a tough sell for me because just the model that they have is so key. You have to have continued growth, and there's all this competition coming in. So it's tough for me getting in this one long term.
Landon, I think the price action in the stock is really a function of overall travel industry is down. The last two CPI datas, airfares down 5.3% a month ago, down another 4% this month. So the overall travel industry is coming down, and that's why you saw Delta. That's why you saw United. But if they start bouncing, like Delta and United have both done, then Airbnb is probably going to bounce with them because, remember, this is an asset-light model that has a ton of free cash flow. They're pretty high quality, and you're right, Landon. I just used an Airbnb at the end of March. It's amazing. Based on after the original reservation, everything was done off the phone. After that, everything was done through the app and the phone, and so they're getting better at this as they keep going. And as more and more people get comfortable with Airbnb, like I said, the asset-light model just screams of an efficient business. But with the whole travel industry lower, just look at the charts on the airfares. This one's with it. But if they recover, if like these airfares think in the second half of the year and European travel all start to recover, Airbnb is going to recover also, Landon.
Yeah, I agree. And, just with the business, it's interesting because you talk about efficiency. I mean, you couldn't have a more efficient model than a building with 1,000 rooms in it, like a hotel, right? You can do the cleanings very efficiently. Whereas if you have one unit, it's very inefficient to clean and maintain and things like that. And those costs obviously get passed on to the consumer. So it's going to be a generally speaking higher cost if they owned each of these homes or apartments or whatever they're renting out. But they don't. They're the middleman between someone aspiring to build an Airbnb business. And what's interesting about that is there's always more people coming in, testing the waters, figuring it out. And so I think you're going to be able to find a good deal for a long time. It kind of reminds me of the phenomenon that I've noticed, and I challenge you to do this. Every time you get into an Uber, ask them how long they've been driving for Uber. And a lot of the times, it's someone that started within the last 6 months. They're either been on for 10 years or they started in the last 6 months. And I think that's how Airbnb kind of goes, is people are jumping in, they're testing it out, and all those new properties are the ones that are kind of, giving you those lower prices, and then they figure out, oh, I need to raise my prices, and maybe they stop doing it, sell the property, or maybe they figure it out in the last 10 years. But there's not a lot of middle ground in that. And so because of that, I think that you're going to continue to be able to find good deals on Airbnb, which is obviously critical for the company. But even though I think it's very inefficient business because you've got one house here and one house there, but they're not that business. That's the owner of the house's problem, and Airbnb is taking those 40% margins in between. So it's a very interesting model. Over time, we'll see if the market figures out those inefficiencies and less people start to list. But I think a lot of people have aspirations of having an Airbnb business, so there's going to continue to be properties pouring onto the site at low prices, which is good for the consumer, good for the business.
Real quick here on that, Landon, this is all about scale. They need people to put their listings up on their site. And that's part of the problem, isn't it? Higher interest rates, slowing economic growth at this point has people concerned maybe where they're not buying that second property for, an Airbnb. Is that a concern moving forward? Because they had decreasing revenue throughout 2024 on a quarter-by-quarter basis, and pretty substantial, and that's a concern they just need people to sign up to be on their site, right?
Yeah, that's it. They've got to get people signing up, which, again, I think there's a never-ending flow, but you're much better off if you have people stay on forever, right? I think that with the prices, it's going to be tough, again, because of the inefficiency. So, if you are looking to expand and build an Airbnb business as a small business owner, 6, 7, 8% that you're going to get on these is makes it very difficult. Your interest rates are going to be high, and then you got to charge a lot more. You're not going to get as many clients signing on. People are going to go to hotels instead. That's all that you're talking about here. That makes a lot of sense. So yeah, I think as interest rates come down, Airbnb is going to do better. And in the meantime, they've got to just kind of survive this lull in travel, survive the high interest rates, and get to the other side. And what's interesting is after all the COVID lockdowns, we saw a surge in pent-up demand for travel and experiences. People were prioritizing that part of their life, and now I think that a lot of people have checked that box and they're kind of coming back down. And the bills are piling up, inflation's a little tough, and so now that's not as high of a priority. But there's a lot of properties out there, so interesting time for Airbnb. They got to get through the next year or two, and continue on their track with growing technology and increasing click-throughs and sales and margins. They got to run their business, but as an investor, you got to see growth growing, and that's not the case right now. So we're a little bearish, but the stock is so low, it kind of puts us a little bit more in the neutral camp.
Yep, we'll find out more on May 7th when they report quarterly earnings. All right, great stuff as always, Landon. Have a great day.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio, joining us breaking down Airbnb.